The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. Today is Thursday, January 3rd. It's almost 1 o'clock, so I'm starting early just to get some of the disclaimers and things that I have to cover before I get the presentation started. But this is another episode of CFRN Thursday, where we go over the CFRN trade setup in slow motion. So the game plan this afternoon is take about an hour to first go over the trade setup, which you see in front of you. There's basically just 4 simple rules, but I'm going to go over them and then take those rules and go inside a live environment, look for the setups, and then start putting trades on and taking them off and managing them. I'm also, throughout this next hour, I'm going to make some observations, some things to look for, traps to stay out of, those sort of things. Just experience from about 8 years of doing this. So that's kind of the game plan. You guys have the opportunity to ask questions, okay? So if you are brand new and you're knocking on the door at CFRN, this is going to be a great syllabus for you, okay? Because I'm going to cover the basics. The trade setup that you see in the morning, and it's going to be a slowed down version of it. So when you go inside the training room, your eyes will be wide open, and you'll have an opportunity to make a educated decision on whether you want to pursue this or not at the end of your trial. Okay. If you are a returning CFRN member, this is going to be a great chance for you to hang out with me for another hour and get some screen time, ask questions. Again, I'm going to make those same observations that, some of the traps that people fall into. And the idea really is to hopefully tip the scales in your favor. Okay. If there's something that you are having problems with, raise your hand. If you have questions, raise your hand. The idea is to get everything on the table and get you squared away. All right. So that's the game plan. All right. Ask questions, ask questions, ask questions. Okay. So the first order of business, again, is the disclaimers. And again, I say this over and over every single week, but I really don't like to throw this up there, tell you to take 5 minutes and look at them, and then shove them back down to the blanket. I'll take a few minutes to go over them because, I've been doing this for almost 25 years, and I really have seen the good, the bad, and ugly when it comes to trading the markets. All right. The disclaimer is basically out there to really scare the pants out of the new people. Okay. Trading futures is a leveraged business. You can lose everything and some in your trading account if you don't have a trading plan, if you're not using stop losses, if you're not watching the markets, if you're not watching your account, if you're, you turn your back onto what's going on. Hoping and wishing is not a trading strategy. So you really have to be engaged in what's going on. Okay. If you're not doing those things, this disclaimer is going to hit you right smack dab in the face. Okay. So the funds that you put in a trading account has to be risk capital. Okay. So again, the disclaimer really is for new guys really looking into our space. They probably got an email, something from marketing or something that says, hey, here's some opportunities in the futures markets. It's kind of whet your appetite. Now the thing is really to throw something in front of you and say, hey, stop sign. Let's pause for a little bit and give you the risks behind it. Okay. And it's real. So again, I don't like to throw them up there and then bring them back down. A few things. Usually the guys that get to the CFRN table, they're numb by this. All right. They already know it. They've been to this room, this guru, and they've been around the rotation. So really, the disclaimer means nothing to them. They've been beaten up and bruised pretty well by the time they get to CFRN. It's CFRN's objective really is to get them back on the path, kind of dismiss all those bad habits they've come in and accustomed to, and try to get you on the straight path. Okay, it's hard. Okay, it's hard for the guys that have been around for a while, because it's hard really to break those bad habits or those things that you've learned along the way, because it's like a kid with a new toy. If you're excited about it, you're learning things and you're tinkering with it and all that stuff. As soon as it doesn't work for whatever reason, okay, you kind of throw it to the side, and then you say, well, I remember the guy in that room was saying this and that, and then you start going back into those never-ending spiral. Okay, that's just what I've kind of run into over 20 years, 25 years of doing this. So again, the disclaimer, the long-winded version, really, you can lose everything in your trading account and some. The capital that you put into a trading account has to be risk capital. I would add to this, look, with CFRN, you do have a trading plan, right? You do have a set of rules. You do use a stop loss, right? It's 8 ticks away, always. The guys in the training room are trained to use a bracket order, so it allows you, it automatically places a stop for you. You're on a 4-tick range chart, so you're going to have to be engaged in the market, all right? It's rules-based, especially with the money management. If the market moves 4 ticks in your favor or closes above or below the MA1, you're going to move the stop to break even, right? You're constantly in front of the screens, in front of the markets, engaged in what the markets are doing. You don't trade around reports, right? Those are some of the basic rules that you learn with CFRN, all right? So back to the disclaimer. Going down the CFRN path, yes, you can be doing all the right things. You can be putting the stop losses in. You can be following rules, all that stuff. But if something goofy happens in the world and the market goes berserk, it can hop over your stop loss. Good thing about it is, because you're going to be in front of the screens, you're going to be in front of a DOM, and this is the DOM right here, this tower. You'll be in front of the screens at least. At least in the end, if all hell breaks loose, you can hit this hot key here, exit at market and cancel and get the heck out of Dodge. Okay? So that is the long-winded version of this risk disclaimer. Okay? I have to talk about it, and so I kind of labor over it, but I just want to make sure everyone's clear what that means. The other disclaimer is the relationship between Bert from Daniels Trading and CFRN. Okay, CFRN is the third-party indicator software trading tool guy. They're basically the educator. Okay, that's what they're in the business of doing. I represent Daniels Trading, or the trading platform, or one of the trading platforms. It's called DT Pro. It's right in front of you. Okay. Their indicator set, which is what you see in front of you, are built inside the platform. So I support the platform. I support the brokerage, the execution. So if you have problems downloading the platform, getting the indicators turned on, turned off, if you have questions about the trade setups, you have questions about, what does this mean? What does that mean? I am the guy you go to when it comes to the platform and stuff like that. When it comes to, hey, you know what? I really like the CFRN mentoring. I'm gonna join the club. Any exchange in money that's between you and CFRN directly, anything on their website, their members area, their Thursday night workshops, the Logic 247, the daily doubles, all that stuff, all the correspondence would be between you and them directly. Okay, so there is a line in between the two of us. Okay, a lot of guys will reach out to me because they know I'm here answering the phone. So if they can't get a hold of Dwayne or Mike, a lot of times you'll call me. So sometimes I kind of get dragged into the CFRN circle. Yes, I'm there every morning. I'm in the background. I'm answering questions. I know the setups. So, I'm in there, but I do not work for CFRN. A big question that I usually get, and I'll share, is that some guys will say, well, does CFRN share in the commissions that you earn if they trade through Bert at Daniels Trading? And the answer is no. They never asked. They can't. They're not registered to do so, and we don't. We don't even entertain that. So it's a sensitive question. It's fair game. I don't blame anyone for asking, but they don't. They never asked, and that should make you feel a little bit better about that and their ability or their transparency on whether they're trying to really make people better traders or not. Okay, so the long-winded explanation about this disclaimer is there is a line between us. Okay, I represent the platform execution, and they are the educator. Okay, it's their indicators. They have the keys to that car. If I need to turn the indicators on, I need to turn them off, what have you. I ask them first. So that's kind of the game plan, and then I go to support, and then they turn them on. Okay, so that's it. That is what I have to cover from a compliance standpoint. So now the next step is to go over the basics, okay, which is the trade setup. A lot of guys that are in the room right now, I can see our returning CFRN members. If you guys want to get a cup of coffee while I go over this part, that's fine with me, or just hang out. It's up to you, okay? Again, again, like I said, the reason why I do this portion is to go over the trade up in slow motion so the guys that are brand new have a better understanding of the trade setup, okay? Now, I know there's some guys popping in the room. So, guys, what I just did is I went over the disclaimers that I have to go over, okay? So now what I'm doing is I'm getting into the trade setup, okay? So this is the setup you see Michael do in the morning. This is the traditional slingshot setup that's been around from day one, all right? If you notice the date on this crazy NASDAQ chart, it's set back to 2012. So Mike took a picture of this snapshot. It was blown up perfectly, so I use it every time, okay? And guys, two things. If you have questions along the way, pop them in the question box. I'm going to see them, and I'm going to answer them. The other thing is my phones might start buzzing. If they do, I'm going to put you on hold, hit the mute button, and answer the phones, okay? But for the time being, we got some time here, so we'll knock this portion of it out. So this has been around from day one. This is traditional slingshot setup, okay? Now, some other trade setups have kind of evolved over the years, but this one has been around from day one. I've seen it work. It works today. Michael uses it all the time, so that's why we're going to learn about this one. Okay? So, first order of business is the time frame. Okay? We're on a 4-tick range chart. Okay? So if you have DT Pro, this is how you get there. Okay? This is the platform, DT Pro. Okay? Just like Michael and Dwayne's. A lot of times you're on a time-based chart. You might be on a 5-minute. You might be on an hourly. Heck, it might be on a daily. Okay? The idea is to hit the drop-down box here, go down to custom, and select range bar. Okay? Make that one look like a 4, and then hit OK. That'll get you on the correct time frame. Right now, you're looking at the ES. You're looking at the S&P E-mini on a 4-tick range. One of the biggest traps people fall into, they'll select the drop-down box, do the right thing, hit custom, but they'll hit the tick bar chart. Make that 2 look like a 4. This is wrong. Okay, if you're staring at something like this, okay, you know you fell into the trap. It's a range bar. Okay, it's got parentheses R next to 4 ticks. The key to this is the height of each candle is 4 ticks in height. So when you're in the trading room and Michael is calling out highs and lows, he can be predictive or be proactive in placing orders. Okay. So when he's calling highs and lows, what he's doing is he's going inside the DOM. This is the depth of market. This is where we buy and sell things. Okay. He's buying it on a stop, or he might be getting short on a stop. All right. He's waiting for the market to go through or break down before he gets in. All right. So when you start hearing that in the room, he's doing that to be proactive because the height of each candle is 4 ticks. All right. So if you do the math, you'll be able to be a little bit proactive in placing your orders, because there's going to be some times where the market just blasts off and you're going to look around and say, how the heck would anyone catch that? And then you're going to notice Michael's in the trade. And the key to that is that he's buying it on a stop or he's selling it on a stop. All right. So inside the DOM, what he's doing, he's actually right-clicking, buying it on a stop. Or if he's getting short, he's right-clicking in the red, selling it on a stop. Okay? So the advantage of the 4-tick range, not only does it look smooth, okay, but there's some advantage of the execution part. If that happens in the next hour, I'm going to show you exactly how to do that. Okay, it'll be really transparent. The DOM's going to be sitting right here. Okay, so I'll show you. All right. So like I said, the first order of business is the time frame, which is a 4-tick range. A little bit of a curveball. Markets have been moving fast. Okay. It's okay to go to an 8-tick range chart. Okay. The same rules are going to apply. It's just your risk factor is going to be not 8 ticks, but 16 ticks. All right. You're just going to double it up, but the rules apply. All right. So again, if things are moving fast, I might go to an 8-tick range, but that doesn't change anything. The rules are going to be the same. Okay. All right. So we're clear on the time frame, 4-tick range chart. All right. We are going to work on the top portion of the chart. Okay. Some buzzwords, things you'll start hearing in the room. So this red and blue line here is referred to as the MA1. Okay. The MA1. The green line is referred to as the BBC. Okay, that's short for bullish, bearish cross. Okay, so the combination of the two, okay, leads us into step number 1. Okay, when the MA1 crosses the green line or the BBC, okay, that's a cross. If the MA1 is red, that's a bearish cross. If the MA1 is blue, that is a bullish cross. Okay, the one that's highlighted here is a bearish cross. Why? Because the MA1 is red. Okay, so what you're doing is you're telling yourself, now I'm looking for selling opportunities. Okay, note that I didn't say just go short. Okay, I said we're looking for selling opportunities after the cross. Okay, because what's normal for the market to do leads us into step number 2. Okay, so after this cross, the normal thing for the market to do is to gravitate toward that green line or the BBC. That's normal. Okay, so that's what we're looking for. The market after the cross to gravitate toward this BBC. Not only are we looking for the market to gravitate toward the BBC, but we're looking for the market to close in the direction of the trend. We're looking for the market to close in the direction of the trend. So if the trend is down because the MA1 is red, then the color of this candle, you're looking for a down close or a red candle. Okay, so you guys are kind of getting the hint that you want everything to be the same color, because when everything's stacked the same color, you're starting to stack the probabilities in your corner. Okay, so you want to see a close in the direction of the trend. Okay. Now, the big question I'll always get a lot of times is, well, why don't you just place an order, go short here? Because look at all this down movement you would have caught. Well, what you don't know is that markets will just blast through the green line. All right. So you're sacrificing price for action. Okay. This touch and close, okay, this rejection of the green line is a hint that, hey, you know what? Maybe we are in a downtrend, that it is doing the normal thing, and it's normal that the market should be heading lower from this point on. It's just an extra hint, right? That another confirmation, all right? That's step number 2, okay? Step 1, the bearish cross. Step 2, what we expect to happen is a normal thing. Market will gravitate toward the BBC or the green line, and then we're looking for that close in the direction of the trend. Okay? Now, our eyes now gravitate toward the slingshot, which is the bottom portion of the chart, which is the oscillator portion of the graph. Okay? Basically, the trade exists down in here in the slingshot. Okay? I'm going to tell you why in a second. All right? So some buzzwords. Okay, so I'm going to break it down. The red and blue line is referred to as the cycle. Okay? And the green line, nothing fancy, it's just called the green line. But what's important is this, all right, is the space in between here. This is referred to as the divergence, or the separation now that Michael refers to in the training room, the separation. Okay? That is what you're looking for, that separation. And I'm going to tell you why. The cycle is red. Okay? If the MA1 is red, and we're looking for a down close, so the candle is red, we should be looking for a red cycle. This is saying that the market is in a downtrend on this time frame, all right, or on this chart, 4-tick range. We're in a downtrend. And this price action up here, this little pop-up back to the BBC, that normal thing for it to do, and this green line pulling away from the cycle is suggesting, you know what? This is just an air pocket in this ongoing downtrend. Okay? And with this space and with this down close, and as long as the market is trending, we're making lower lows or higher highs depending on the situation, the next thing that you do really is go inside the DOM and get short. That's what you end up doing. So what you end up doing really is left clicking in the DOM and creating a short. You get short the market. Okay? If you left click in the red, we get short. We make money as the market goes down. If we left click in the green, that's where we buy things, and we make money if the market goes up. Okay? So that is the ideal situation. Now, I told you what happens is the trade exists down here in the slingshot. Because here, again, the normal thing for the market to do is to do this. The green line is going to pull away and eventually come down and trade into the cycle. Okay, that's the normal thing for it to do. And what's going to happen, and what we expect to happen, is the market then to make a new pivot low. Okay? It's at this point here, we're cutting it loose. Well, why do you say that, Bert? We expect the green line to pull away, get into the cycle. Pull away, get into the cycle. Pull away, get into the cycle. Okay? Repeat itself until what happens? The cycle starts turning blue. Okay? So then we're looking to get long, right? And then we're looking for that green line to go underneath it and pull away. And pull away. All right, that's what we're looking to do. So then you're going to be buying these dips or selling these rallies. As long as we're trending, as long as we're making higher highs or lower lows. Okay? So basically, yes, the trade exists down here in the slingshot. The price action is just giving you the clues that it's doing all the normal things. Okay? So when you sign up for the CFRN, you're not learning to pick the top or pick the bottom and trade it from point A to point Z. You're learning to take a piece out of the middle. That's what you're learning to do. Okay? And every trade has an 8-tick stop attached to it. So what does that mean to you if you're brand new? Well, if you're trading the gold and the crude, you're risking $80. If you're trading the S&P or the beans, it might be closer to $100. If you're trading the mini Dow, it's $40. Okay? Each instrument is different. Okay? But that's the bottom line. And along the way, you're going to trail the stop, trail the stop, trail the stop. So, what are you signing up for? Well, you're on a 4-tick range chart. So that means you're looking at the market under a microscope, right? So that probably means you're going to be doing a lot of trading, right? You'll have to be engaged and in front of the screen. Okay? You're going to be using aggressive risk management. That means you'll have to be engaged in the market in front of the screens. You'll have to be in front of a DOM. You'll have to practice with the DOM, okay, moving the stops, okay? Not only that, you're going to probably do a lot of trades, okay? You're signing up to scalp the market, okay? So that's kind of what you're signing up for, all right? So that is that's the slingshot setup in slow motion, okay? There's some other rules that are going to apply. I'll point them out as we get going here, but this is basically the setup, all right, in its original form, okay? Like I said, some more guys were popping in. So what I did is I just went over the rules setup. And what we'll do is I'll take those same rules and we'll go inside the market and we'll apply them, okay? I'll get inside here and we'll buy and sell, and I'll make some observations, and especially the traps that people kind of fall into, okay? You're going to start hearing a common theme when you start listening to me every Thursday, okay? So, all right, so let me take, let me put the live account down. Yes, Brian, I will show that for sure. That's one of the big things I go over in the room. Brian's question is, can you show some examples of when the market is trending and when it's not? Okay, that's a big trap people fall into. All right. All right, so as Brian got into here, the first order of business is what? Before we push any buttons, the market needs to be trending, period. Okay, so if we're not trending, we're not pushing any buttons. So here I'm looking at the ES chart, the ESH9. What I want you, Brian, and all the other guys to do is get in the habit of hitting this zoom out button right here. That's the first thing you do. Okay? I'm not asking you to go to a 5, 30, 15, change time frames. Get in the habit of hitting that zoom out button. And the reason is you'll be able to get to see a little bit more of the landscape of the market. Okay? You'll be able to see whether the market is trending or not. Sometimes when you're in the room, you get hypnotized by this. Okay, Michael's got a big chart up. Okay, you're only seeing a sliver, right, of what's going on. If you get in the habit of just 3 or 4 clicks, that might be the difference between you making or losing money on a trade. Okay, take the time to do it. Okay, because again, here's a perfect example. Here's the pullback to the BBC, right? There's the down close. Might be looking that we're trending, but if you take a few clicks and look, to me, this is a mess. We're trading sideways right now in the ES. Okay. Let me show you a better example of it. All right, here's another example. Here's the crude oil. Okay. We're not trending here either. We got a low here, we got a low here, and we got a low here. That's sideways action for now. Okay. You can almost draw a box around it, right? If you can draw that box around it, that's no good. Yes, I will, Jack. It has to qualify, and I will. Okay. But I'm doing more teaching than trading. And if it does, you'll see me do it. Okay. It has to be easy and obvious. If it's not easy and obvious, we're not shooting from the hip. Okay. All right. So, and if you're still wondering, well, if we're trending or not, if you're a little confused by it, the dynamic support and resistance dots will also be a clue. If they're side by side, that's a clue. Okay. That maybe we're not trending. Okay. Now there's been some energy right now in the crude. We've made some higher highs. So I'd actually be looking to get long here, the crude. Okay. So right now we have a bullish cross, right? The MA1 is blue crossing the BBC. And what's normal for the market to do? We said pull back to the BBC. Okay. After this cross, what I'd like you guys to do is get in the habit of engaging your trend line. You see Michael do it all the time, but you need to get in the habit of drawing trend lines. Okay. Because there's going to be a point in time where the market has so much bullish or bearish momentum, it won't get back to the BBC. And you have to practice drawing that trend line, because if it can't get to the BBC and take off, at least you're in a position to take action inside the DOM. Okay? So the trend line started like this, off the two tops. Okay? Now we poked our head above it here and closed back underneath it. So the trend line would have been like this. Okay? This would have been the first close above the trend line to activate the long trade. Okay? This candle here. All right? Now, a few things that's happened already is that the fact that we closed above the MA1 and we are going into dynamic resistance negates that trade. All right, so there's no long positions right now in the crude given the close above the trend line. Okay, why? It's because it's a momentum trade, and we don't take momentum trades into dynamic resistance. Okay. All right, so what does that mean to you? For the moment, we're looking for the market to do the normal thing, which is pull back to this green line or the BBC. Notice the cycle is blue. That's good for the home team if we're buying it. And the green line is pulling away. So we have that space, right? So that's all good stuff. All right. That's taken off. So we're going to skip that one. Okay. All right. So let's move on to the next one. Let's go to the S&P again. Okay. Notice the first thing I do is I zoomed out. Okay. Again, zoomed out to see if we're trending. We did poke our head above the last reaction high, but notice the candle, how, Brian, we came right back into the range. That's kind of iffy to me. Again, it has to be easy and obvious. Okay. And that should be your, that everyone, that should be your, that should be part of your rule set. Okay. You should be able to filter nothing out. Okay. But we had the bullish cross here. The MA1 is blue. The market did do the normal thing, which was pull back to the BBC. We did have the up close. The cycle is blue, and we have some separation. So it had a lot of the variables for you to go long the market. My only hesitation, okay, Brian, and this is a big trap people fall into, all right, is that we did poke our head above it, but we're kind of chopping around here. All right. The result here would have been a break even. No harm, no foul. Okay. So let's move forward. Let's go to gold because gold has been trending all day. Maybe there's something to do there. All right. Well, there's something to talk about here. Okay, a few things. All right. Number one, the bullish cross. MA1 crosses the BBC. The normal thing for the market to do is pull back to the green line. Okay, it does it here. The cycle is blue. We have the bullish separation. What's the normal thing for the market to do? Okay, green line for it to go into the cycle and the market to make a new pivot high. Okay, there's an opportunity there. It gives you another opportunity. Okay, a pull back to the BBC with the up close. As I said earlier, you want to get in the habit of drawing trend lines. Okay, because you don't know if it'll get back to the BBC. That's how that trend line is drawn. And notice the cycle turned color on you. So you needed a close above that trend line before you took action. It did, okay? And there was divergence or separation. The cycle is up here and the green line's underneath it. That's okay, Mark. All right. I'm saying that because it's leading into one of the biggest traps that people fall into, okay? Which is this guy here. Okay. Number one, it stopped trending. We have a double top. Okay. It eventually does the normal thing and gets back down to the BBC or the green line. Okay. Notice the cycle, how it's turned red and now curled against you at a 45-degree angle. Okay. That is a disqualifier. If it is the wrong color and it's flat, that's okay. That's okay to go long. If it turns color on you, but starts curling over at a 45-degree angle against you, despite the move up here, okay, there is no trade. That is a disqualifier, and one of the biggest things people fall into. Okay, it's got to be flat or the same color. That's what you're looking for. Okay, so keep that in mind. You ideally want everything to be the same color. All right. So again, we get another pullback to the BBC. We have an up close. And look at what the market did. Ultimately, it went down because it was going with the cycle. The cycle was telling us the market is going lower. Notice how we weren't able to make a higher high. Okay? That's the reason. So keep an eye on the cycle. And if it's against you at a 45-degree angle, that's a big fat no-go. Okay? So for the moment, the gold is in a range. We're trading sideways. Okay? Brian, top's here. Bottom's here. We're sideways. Okay? No trade. If something pops up, Jack, we'll do it. It's gotta again, as we noted earlier, we said, hey, this was a red flag here. The market's telling us a lot here. We are just trading sideways. That's the S&P. Okay. I'm gonna switch guns and go to natural gas. Okay. Okay. That does move, and we'll look at that. Okay. Here's the natural gas in February. It's pulling back to the BBC. We actually had the up close just now. Okay. That would be bullish, right? The cycle. We have separation in between here. Okay. The problem is we're not trending. Okay, Brian? We're not trending. We have a double top here. Okay. So right now, despite that close, underlying dynamic support printing, we don't. And not only that, this is telling you something, right? Here it is in full action. It's turning red and starting to curl over. That's right, Mark. So now you're catching up. So here's the deal. Okay. A lot of times people will say, well, I don't know if it's 45 or 40, 30, 35, 25. look, if you have to ask yourself those questions, no trade. Eliminate the risk and move on to something that's easy and obvious. Okay? So again, there's that trap people fall into. Not only that, we have a double top. Okay? So the key is to get in the habit of hitting that zoom out button. Okay, that'll save you some money if you catch it up wrong. All right, let's check out crude oil. Okay. Yes, Brian, I would want to see closes. I'd actually want to see, like right here is a perfect example, I think, of what you're talking about. We have dynamic resistance. Now, Brian's questioning about the trend because that is a big deal. It's easy to talk about the market making higher highs or lower lows. Okay, it's an easy thing to just throw out there, but it's actually difficult for a lot of people. Okay, Brian, this is a double top to me. Okay, that's a red flag. This is dynamic resistance. Okay. Yes, we poked our head above it, but look at how we gave it right back on the next candle. I don't see a lot of energy there. Okay. So just kind of poking our head above it and then back below. I would look for better opportunities. Okay. How far away from the support or resistance dots? I would say at least 4 ticks, at least 1 candle away, maybe even 2. All right. Like I said, that's a good question, Bart, because that flows into what Brian's saying. How far away above support or resistance? Right now, I would say, all right, we're starting to trend a little bit. The other thing I would do also, again, as I labor over, is zoom out. I don't see anything over here. I see an air pocket. So that's also good. All right. Then we are getting that pullback. We're finally getting that pullback. I would note here too, the cycle is at the midpoint here. It's a little flat. Usually when this is flat like this, there's not a lot of energy. Who knows? It might just blast off here as we get into the 1:30 hour. But when this is flat at the midpoint, I just think there's just better opportunity. So to answer your question, Bart, at least 2 candles, I would say, to be sure. Keep an eye on your slingshot. If it's at the midpoint here or curling over or flat, that's pretty much telling you we just don't have any energy. Okay, and I would just go look for another market to trade. Gold is back in this range. All right, now there's my phone buzzing, so don't go anywhere. Yep, I'm still here. That just took a little longer than I thought. All right, so this is the gold. We had the bullish cross here. That means the MA1 is crossing the BBC, but again, we're not trending. All right, so no action. Okay, we need to make some higher highs before we can get excited about getting long gold. All right. Okay, let's go to the ES because I saw that breaking down here a little bit. All right, so the ES did break down a little bit here, but again, okay, we got a lot of congestion here going on. So right now, I'm really not excited about buying or selling the ES until she really starts breaking out. Okay, notice the market had pulled back to the BBC. We had the down close here, and notice the cycle has turned blue but started curling up. The market is giving you grief, okay, because you took action on this, and this was the wrong color in the wrong direction. Okay, this would result in a stop out. So again, keep an eye on that. I'm trying to look for something we can sink our teeth into, because I do want to get inside the DOM and show you what the heck's how to do that. Shoot, this was all right. There's basically a perfect scenario, okay, where we do have the bearish cross, and when it's crossing the BBC, okay. The market does the normal thing. It's going to gravitate toward the BBC. In the process, we draw a trend line off the lows because we never know if it's going to get back here. And we never know if this is going to turn color on us, right? So we get up to the BBC and we actually have the down close, which is step number 2. And not only that, look at the cycle. It's red and we have the separation. Everything is the same color. So this stacks all the probabilities in your corner, okay? To be fully transparent, we weren't really trending, okay? But I'll tell you what, when you get faced with everything being the same color, all right, again, you're stacking those probabilities in your corner like that. You're going to find out you could probably take some of these, okay? But to be fully transparent here, we got to be making some lower lows like it's doing now before we can take action. All right, that's a big deal. And you can tell that's a common theme this afternoon because I've seen it over and over and over and over. Okay. All right, let's get back on track and see if we can't. All right, so here. Put your DOMs down, okay? Just watch me, okay? We had the bearish cross here. We're getting the normal thing, which is to pull back to the BBC, okay? And we have some bearish some separation here. Let's see if we can get to the green line and we can get short here, okay? We have a double bottom here. This isn't ideal, okay? So here's that thing where so we have the down close. I did this for a couple reasons. One, to show you how to get short a market inside the DOM, okay? But I also want to show you how to trail a stop, okay? So once the market goes plus 4 ticks in your favor, you're going to move the stop down to break even. Okay, I just did that. So the way to do that is the number 1 here. First of all, you left click on the red. It creates a short, okay? A sell, okay? And we just got stopped out. All right, so a lot happened there. I was hoping it would break down so we could talk about it a little bit. But here's the scoop. Okay, number 1, it was not trending. Okay, we had a double bottom in place. All right, but I wanted to show you was this. It did the normal thing. It pulled back to the BBC and we had the down close. So step number 2 was there. We also had the cycle red. And we also had the green line pulling away, right? So it had a lot of the variables in there that I was looking for, okay? Again, the only thing was it wasn't trending, okay? The reason why I jumped in there is because I really wanted to show you how to place an order. So when this activated here, when that match was lit, All I did was went into the red and left click. Now what I have is a bracket order created. Okay, see this little Tinker Toy triangle? If you activate it, deactivate it, the bottom of the DOM opens up. Okay. If you check the buy stop and the sell stop portion of the bracket, but more importantly, if you right click over it and put factors and ticks, if you make that an 8, what it'll do is it will automatically place a stop loss behind your trade as soon as you enter it. Okay. So what I was trying to get to is, hey, we got short at 24.64 based on this close. The stop loss was behind it. And a way to really to drag down a stop is you just left click over it and just drag it down. So that's all Michael's doing. He's getting into the trade with just a stop loss. Okay. And he's letting the market, do its thing, just dragging it down, dragging it down, dragging it down until ultimately what we expect to happen is the green line, right? To get into the cycle. And then it repeats itself, right? And then it gets into the cycle. Okay. So now guess what you would expect to happen? Price action should go back up again. All right. So if it happens again, I want to show you how to do that. Okay. See, it's doing it again. It's pulling back to the BBC. Okay. The trade exists down here in the slingshot. Okay. It's all down here. All right. So notice how it's curling up a little bit, right? It's blue and it's starting to curl up. That's a red flag, right? That says don't take any shorts. Okay. No matter what happens, if it falls apart here, it doesn't matter. This is curling up and it's telling you, watch out. Okay. All right. Let's move forward again. All right. Crude oil again. It's not going anywhere fast, so we don't have to worry about that guy. Crude oil or natural gas. Okay. We had the lower low. All right. We hold the pullback to the BBC. We actually had the down close. Okay. Get in the habit of zooming out. Okay. This is in a market that's just not trending, guys. Okay. It's sideways. Okay. Again, the market really needs to be making lower lows or higher highs. It's very key. Okay. So I want you guys, again, labor over it again. Get in the habit of zooming out. And when in doubt, just stay out. Okay. All right. So nothing to be done here. Okay. In fact, here, let's do this. I do want to show you this. Okay. Here's an example of what Michael does. If the high is 294.80, then the low has to be 294.4. He will right click at 294.3. Okay. Just got filled. Okay. Because this will create a red candle. So the idea really for you is this. Whatever the high or the low is, just add or subtract 5, and that's the number you click on inside the DOM. Okay. Now notice how I got short. This is where I got short. It also tells you up here the P&L will be moving. This is where and it also shows you on the chart where you got short. So there's 3 or 4 visible areas where it says, hey, you're short the natural gas right now. Okay. And not only that, here's my stop loss. It's right here. Okay. That's that bracket order I was just referring to before. Okay. It's right there. So you don't have to push any extra buttons to put a stop loss in. It does it automatically for you. Okay. Also, it's up here. This tab should always be open. One of the biggest things that I see people do is they'll get out of a market, think they're flat, but they have working orders in there. And they end up getting filled on those and not knowing where the heck they are in the market. All right. So we're short the natural gas here, and we have a stop here. Now, I'm going to move the stop down just to show you how you do it. Okay. So all you do is take the number 1, put your mouse over it, left click over it, and drag it. Release it. Okay? Left click over it, drag it, release it. That'll move it back and forth. Okay? Now again, I took this for a couple reasons, just to show you how to place an order, how the stop looks, how to move the stop. Okay? As far as trade setups, okay? We're not trending. We're inside this crazy box. Okay? That's why I think the market's just trading sideways. All right? The original trend line was drawn like this. This is a habit you should get into, drawing the trend line. Okay? We have to adjust the trend line a little bit, accommodate for that low. This close here is the close under the trend line and actually lights the match for the down close. If the cycle is blue, right, that is watering down the probabilities, correct? As long as it's flat, it's fair game. As long as it closes below the trend line. It has to violate and close below the trend line in this example to create a short. Okay? So the idea was, hey, let's get inside the DOM and create a, try to go short. And in doing so, you left click in the red. So we're short here. So just do this. Because actually we should have been short right about there. I'm going to drag it and release it. Now our stop is at 294.4. And we're short from 294.2. So we've kind of reduced our risk a little bit. Okay. Now if the market goes 4 ticks in our favor, we move the stop to break even. So I left click over the number 1, drag and release. It's now at our entry. What do we expect the cycle to do? Ultimately gravitate into the cycle, right? We expect a green line and to get into the cycle, and the market will make a new pivot low, or at least challenge this low. Okay? So right now we're short here. You got $40 in your corner, and you got to stop at break even, your entry. Okay? So that's the game plan. Like I said, in the end, to be fully transparent, okay, this is very choppy, okay? But there was reasons why I did it, just to show you how to place an order and move the stop down and all that, okay? But the process is the same. Bearish cross, pull back to the BBC with a down close. What color is the cycle? It's red. Okay, we get short. As long as the market is trending. What's the normal thing for the market to do? Gravitate toward the BBC with the down close. Okay, if you didn't get short there, there was an opportunity here. The cycle turned a different color on you. Because the color of the cycle turned on you, you had to draw the trend line, and you needed to close below the trend line before you could get short. Okay, so now all we're doing is moving the stop down. Okay. All right, so we're going to, quickest way to get out of the market, see this hotkey button, exit at market and cancel. Not only does it get you out, but the biggest thing it does is it cancels your working order. And guess what you expect the green line to do? Get into the cycle, and this would be the exit anyways, okay? So that's walking through the trade. Let's move on to the next one. Okay, we have crude oil here. See how we're really scrunched up here? We're going to forget that. I didn't even look at the euro currency. Here I'm laboring over. Okay, so here's a good reason why we just don't place an order at the BBC. Because here's an example where it just plows right through it. Okay, we sacrifice price for action, so we're waiting for the down close. Okay, here's our first down close. Okay, another disqualifier just popped up. Okay, not only does this negate it, right? Blue and moving at a 45-degree angle against us. That's not good. But also now the black step line is piercing the BBC, and that's another disqualifier. All right? So a few things. Number one, disqualifiers. If the market is trading sideways like it's doing here, no trade. To me, that's a disqualifier, okay? The market's not trending. You shouldn't be pushing any buttons, okay? If you're confused about the direction, dynamic support and resistance side by side is a good indication. They look like a pair of choo-choo tracks here. That's usually a good indication we're trading sideways, okay? That's number one, the disqualifier. Number two, the cycle turning against you at a 45-degree angle. That is one of the biggest ones, okay? And number three, that black step line piercing the BBC before the close in the direction of the trend is the other one. Okay, so there's basically three. How am I going to how am I going to remember all this stuff? Just going to have to sit in front of the screens and practice, practice, practice. Okay, the more screen time you have, the more you'll pick up. Okay? All right, let's try a different market. Swiss franc, again. Brian, see the dynamics, resistance, and support side by side here. Swiss franc trading sideways. The Japanese yen, the weakness in the indices, you think yen up. I agree, but for the moment, notice the first thing I did. Okay, this has a lot of the variables here. Okay, we had the bullish cross here. MA1 is blue, crossing the BBC. The normal thing for the market to do is pull back to the BBC. You're looking for a up close. That green candle lights that match. The cycle is blue, and we have that separation. So we got all the variables, but sideways. Okay? And I think the market laboring here could be an indication of that. Or what happens is, if there's so much congestion here, sometimes you get a little lucky. It'll start breaking out, and then you really get a mover. Now, the indices are breaking down, so let's jump on that bandwagon. Okay, so here we go. We're making some lower lows. So that's the trend line right now. Started like this, but now it's like this. That is the close below the trend line. Okay. Okay. It turned blue. It required a close underneath the trend line. It started here. The fact if this starts curling up, it's not going to be good for the home team here. But that's something you'll see Michael take in the room. It's short of 53.5. The stop is 55.5. That's 8 ticks away. The fact this is blue and starting to curl up is not going to be very good here. So we'll see. This is what it is. Now, if we get a close on the other side of the MA1 here, unfortunately, the rule is you move the stop down to break even. Okay? That's going to put us right on top of where we got short, which isn't going to be very good. So that close there lit the match to the downside, but notice what it did. It did the normal thing, which was pull back to the BBC. Okay? It's curling up, right? What would you expect would happen? I would expect us to get stopped out. But we'll see. And there we did. Get stopped out. So that close there, okay, was the down close. Okay? Were we trending? Sure were. We were making some lower lows. All of it was there. Okay? And now look what's happening. Midstream, in the middle of the trade, we start curling up, and the price action is indication of that. Okay? Moral of the story is, ideally you want everything to be the same color, right? That would be ideal. You know, what happens if it happens when you're in the middle of the trade? Well, you have a plan. You get short, you have a stop in, you just manage it from that point on. Okay? Now we have the bullish cross, but now we're running into some resistance here. So, all right, let's move on. Let's see if crude's doing something. A little bit of support over here in the crude. So we'll table that. Okay. Natural gas is making some lower lows. We have a double bottom here. Okay, again, Brian and Bart, this will answer your question. That was an old low. We poked our head above it, but we're actually still trading above it. Okay. So if that sticks, then I would expect the market to gravitate toward the BBC again. Okay. So to answer your questions, are we trending? I'd say this looks more like a double bottom to me. Okay. So let's see if it gets back to the BBC. Okay. Went to the Japanese yen because market was breaking down on the stock, so the yen should grab flight here. Okay, so we broke out of the highs, right? So we're trending. Notice how I zoomed out. Okay. Now we start drawing trend lines. Okay. What we expect the market to do, gravitate toward the BBC. That's normal. Okay. This is a caution, right? Red means waters down the probability. Red means different color. We have to draw the trend line, and we have to close above the trend line to light that match. As long as this is flat, we're okay taking the long side of this. If it starts curling over, we're going to pull the trade. Okay. So the yen is trending because we broke off of these highs. Okay. Let's see what happens. Just waiting for the market to pull back. Stocks are firming a little bit, so that should offer the pullback. All right, now here we go. You got a red cycle that's starting to curl over, right? 45-degree angle, 40 degrees, 30. I'm not sure. When in doubt, stay out. Trades off the table. Let's move on to the next one. We don't want to do that. We just want to, here's a good lesson here while we're at it. Quick way to get rid of the trend line. See this box here, select all. If you left click on it, that X just gets darkened. Left click on it. Okay. By the way, no trades. We're close to closing above that trend line there. But again, that's suspect there, so we got to be careful. Going back to euro. Nothing to do in the euro. Let's do this. Let's take that same ES chart. Okay. Okay, we need to make higher highs here. But let's change it to an 8-tick range. Let's slow things down. Okay. Again, it's the same setup. Okay. That's a close. This is why you draw a trend line, because you never know if it'll get back to the BBC. And in the process, it takes 2 candles for you to connect the dots. That is the close below. That is the separation. Okay. Same thing here. It's probably right about where we got short, probably down here. Okay. Draw the trend line. It closes below the trend line. This is a problem. It's blue and pointing up. So we wouldn't have taken this even though it offered a few ticks there. Okay. The only difference between this and that 4-tick range, it slows it down, but your risk on the trade now becomes 16 ticks. Okay. All right, so let's try. I'm on an 8-tick range. Looking at the Dow, again, get in the habit of zooming out. We got some sideways congestion. Okay. All right, let's take a look at a few more and then we'll call it quits. I'm going to switch back to the 4-tick range. Okay. So again, that I noticed the first thing I did was zoom out and found a little bit of support here in the natural gas. Wouldn't be surprised if she pulls back here before it offers an opportunity. Okay. There was the crude oil, kind of got a little energetic here, and finally get to the BBC. Trend line drawn like this. That is the down close. The blue cycle requires the trend line and a close below the trend line before you can get short. The tilt of this puts it in question. Okay. For me, I'll step away from it, especially when I see a little bit of support here. Okay. All right. This is pretty interesting here. So now we have gold trading above the highs, right? So we had a double top here. We finally poked our head above it. Okay. So that being said, and then we have, back here, we had the blue line or the cycle midstream. Now it's above and showing it has a nice slope to it. So with the gold, I'd be more inclined now to look at a pullback in the gold. Okay. Okay, we're above these highs. We're spending some time above the highs. We didn't just poke our head above it and give back. Now we're starting to hang out there. Okay. So the gold is in a position to go higher. And we're just looking for the market to start gravitating toward the green line because that's the normal thing. Okay. So if that happens, what we'll end up doing is left clicking inside the DOM. Okay. We'll left click. Let's see what happens. Got a little bit of time here. I'm running over a little bit, but we got interrupted by that phone call. All right. So we're looking for the gold to do the normal thing, which is pull back to the BBC. Okay. The bullish cross was back here. So that was telling us, all right, we need to look to get long somewhere. This kept us out of the market. Even though it went up, that kept us out of the market because we were concerned about the double top. It wasn't trending. We were also concerned that this was blue and at the midpoint, so it wasn't the perfect setup. Okay. Now we're trading above these old highs, so we can take that off. Okay, we can take that filter off. We're above the midpoint, so there's a lot more positives here now that we're making higher highs. So now we're looking for the market to pull back. That's what we're going to do. So stand by. Let's see what happens. Okay. Be patient. I know. It's going higher. It's making higher highs. Just we're waiting. The good thing is it's telling you we're trending. So that's good. Okay. That's what you want it to see. Making higher highs or lower lows, right? All right, so maybe we're going to get our pullback. All right, so right now, your trend line should be engaged. Okay, you should be pushing this button and getting ready to draw a trend line. Okay, it's going to take another red candle to connect the dots. Okay, so let's see if we get that red candle. Come on, don't labor on us here. Takes two candles. Okay, let's see another red one. If it pulls back here, we had a red candle here. Right? It had a little doji here like that. You could draw a trend line off those two. That's okay. Okay, going back to the trend line point. This is how you would draw that one. You would adjust it with this one. Wow. All right, we're just waiting for the gold to pull back. Okay. Yeah, it doesn't. Ideally, what you want, because here, what he's talking about, Mark, is this. Okay. Like that candle there. Red candle, green candle. So it doesn't matter what color. What you'd like to see is this flagging action. Okay. You get 2 or 3 consecutive candles back to back to back, higher highs, lower lows, that kind of thing. Yeah. You want it to make a new pivot low, flag, pull back. Normally you'll see green, 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 and then you can just kind of connect the dots. Like after the cross here, we had a red, 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 and then we took off. So ideally what I'd like to see is a red candle, a red candle, a red candle, so we can draw the dot, trend line, and go from there. Like this. It's like we're seeing here, the ES. So you get 3 consecutive green candles like that. Okay, that would be better. Yeah, so when it changes direction. So you got lower lows and then, right, because the market will do like it's doing here. Right? All right, let me go back to the gold chart. Okay, we need to get back to this green line. See, the divergence is building here. This is good. Okay, so the cycle is blue, telling us the trend is still up. We're just waiting for the market to pull back to the green line. If it does that, then this green line will separate itself even further from the cycle. Okay, and then we should have a decent setup. Okay, so again, this line is telling us higher. Okay, the green line pulling away is saying, you know what, maybe we're going to get this pullback to the green line. We'll get the separation here, and then we'll get a qualifier to get long. It's just kind of sitting here, of course, when I start looking at it here. Let me see if there's something else we can get our... Okay, the same thing. This is the crude oil mark. See how the 2, 3 different separate candles here? It's very clean. Like that. Yes, all green. Okay, that would be the down close, right? But again, the cycle is not optimal. It's telling us it might rally. Okay. All right, so let me go back to the gold. Okay, so we're starting to get it. Okay, so let's see what happens here. This might be the only really one we get to do here. It's getting late in the day. So what would happen is this. Here's how the trend line is going to look. We get a down close here off of that top, off the top of the wick, and the corner of the body. Okay, that's how it'll look. And we do this, okay, because we don't know if it'll get back to the green line, right? We don't know if it'll get to the BBC. Okay, so we had another green candle. Market's making a new low. Got a little dynamic support here, so don't get too crazy. And the cycle here is not in a position. So one sec. Okay. All right, so let's see. We have dynamic support here. Let's see if we can spend a little bit more time. We don't have the divergence. The cycle is red. Okay. You want that green line to be on the north side of it. So we're going to need price action to come up for that to qualify. The market's going to have to do some work to the downside here because the cycle right here is in the middle, right? All right, so we are making some lower lows. All right, so activate your trend line. Here we go. We're getting the divergence. Get ready to draw a trend line off the lows. Okay, there's two. It's doing the normal thing. Get back to the green line or the BBC. Okay. Still have the divergence. Okay. We get a red candle here. Okay. It's turned blue. Okay. The trend line's already drawn. It requires a close below the down trend line here. Okay. That was the close below. Just, dang it. All right. Well, it moved pretty fast. I wasn't. Bottom line is this. Okay. This here activated the short right there. This was blue. Okay. The bottom line is here. We would have been 4 ticks in your favor. Your stop would have been a break even, and the result would have been a break even anyways. Okay, so no harm, no foul. But the idea of walking you through the process is kind of the process that you walk yourself through. Okay, so the market makes a lower low. It's supposed to gravitate toward the green line. You're going to draw the trend line in that process. And we do that because we don't know if it'll get to the green line. If it doesn't, or if the cycle turns color on us, then we know it needs to close below it. And then once it does, okay, then it's time to take action. Once the candle closes below the trend line, yes, needs to close. Everything's got to be on a closing basis. All right. I'll take one look at the gold, and then we'll call it quits. All right, we didn't even get a pullback. So we're looking for the gold to pull back here so we can buy it. Okay, that's the bottom line. We're making higher highs, and I do that by zooming out. Okay. All right, so no, as long as it closes below it, if that S&P is a down close, that was the down close. That's the one that lit the match to the downside. Okay. Draw the trend line. That closed below it. Right there at 24.51.5, you go right into the DOM and left click. That's your course of action. Okay. Doesn't matter what this one was doing or that one was doing. From this point on, as soon as you're in the trade, then it's just money management. Trail the stop, trail the stop. So here we're doing it again, right? That's the trend line. That's the trend line you should be drawing. Okay. But here's the thing. We got a little double bottom here. Okay. So no, I wouldn't be too excited about taking that trade. And you might say, hey, well, we made a lower low. Well, with one candle, no. That goes back to what Bart was asking. Is it one candle, 2 candles, 4 ticks, 5 ticks? No, it's going to have to spend some time. Okay. I don't think of that as support, breaking the downtrend. Okay. All right. So that's it. We ran over. which is cool. I don't mind doing that because the phones, I only had one little phone call there. But the bottom line is this, okay? The takeaways, number one, get in the habit of hitting that zoom out button. I'm not asking you to change time frames. Just get in the habit of zooming out, okay? Because what this will do is allow you to see a little bit more of the playing field and whether or not we're trending or not. If you're unsure about it, just don't push any buttons. Wait until it's easy and obvious, okay? Number two, after you do get the cross, your next order of business should be engage the trend line. You should be in the habit of drawing trend lines, okay? And the reason is two reasons. Number one, we never know if it'll get back to the BBC, right? We never know. And if it doesn't, and there's separation or divergence down below, then we're in a position to take action, okay? The other thing, too, is if it turns a different color on us, right, the trend line is already required. The trend line's drawn, so you're not fumbling around trying to draw a trend line in the middle of a trade. It's there. It's done. Again, you're in a position to take action if it does break it, okay? One of the biggest disqualifiers is the cycle turning color on you, okay? We ran into that a lot of the times, okay? Like this one here in the crude, okay? We get the pullback to the BBC, right? But the cycle has turned blue and it's a different color. That's a disqualifier, okay? The market will probably give you grief, if not stop you out, okay? So, if faced with this, no trade. That's one of the biggest disqualifiers the traps that people fall into, okay? They get hypnotized by the lower low and the market's moving and they're thinking, hey, I'm missing this opportunity. I need to get in. I need to get involved. And then, they're told, hey, draw the trend line. And if we close below the trend line, well, they kind of forget that this is also an indication that says, you know what, maybe we're going to move up first before we go down. If you want all the cards stacked in your corner, all the probabilities, make sure everything's the same color, right? What does that mean to you? MA1 is bearish. The normal thing for the market pulls back to the BBC with a red candle. The cycle is red. Everything is red. There's no other thing to do other than to go inside the DOM and push the button. Okay? And obviously the market needs to be trending. Okay? So that's a scoop. Do you learn this overnight? No. Okay? It does take time. You need to be in front of the screens, learning the personalities of the markets that you're trading. You need to put trades on. You need to take them off. Yes, I know it's not the same with demo money, okay, because you don't have that that pressure on you of losing and making real dough, okay? But just going through the motions and practicing and pushing buttons, that's a big deal, okay, and getting comfortable with the platform. So if you have questions, email me or call me, okay? Raise your hand, say, hey, what about this? What about that? I'm happy to spend the time with you. That's why I created CFRN Thursday, because there was a demand for it, okay? So the idea is to answer the questions that you have, okay? So that's it. If you're brand new, this is a good syllabus. So hopefully this is a benefit for you. So tomorrow when you go in the training room, when Michael's putting trades on and off and things are moving fast, maybe you're going to absorb some of this stuff. Oh, that's the pullback. That's the cross. Oh, yeah, it needs to be trending. You'll start hearing some buzzwords, and things will start slowing down for you. Okay? So that's it. I'll be here next Thursday for another hour. See you in the room in the morning.